Hi everyone. Um, Hoping that you can hear me and that you can see me. If you would let me know on the screens. Yes, yes, there we are. Sorry about being late. I know there's no such thing as being fashionably late for television, but my technical skills prove to the world that I'm a boomer. So here we go. And I'm going to call myself your favorite boomer because I'm older than Hogue and Eddie. And that gives me top spot as the aged. So, welcome to Market Kickoff. I'm glad you're here. Lot to talk about, a lot going on before we go through all the different levels. I want to tell you a little bit if you've been in a cave over the weekend, or you were a smart person and giving yourself some time away. You may not have realized that China and the US said, hey, listen, let's just go ahead and I love it. Hey, Granny, I love it. My nickname is actually Genie with my grandchildren because I make the magic happen. There you go. So, and that's a true story. So, China and the US have kicked the can down the street. The EU and the US have done a tariff deal, 15%. They've got a lot of work to do on the pharma aspect, which could be a fairly big deal, but in the end, things are working around. But for China, they've kicked the can down the road for another 90 days. I don't know if that's good, bad, whatever, but we have a slurry of very important data that's coming this week. And so let me double check reading what we've got here. Of course, Friday, August the 1st, we've got the employment report. Volume has really been fairly low in the last few days. Overall, we've been really running under normal, but that's summer. Summer months. So we've got the trade balance number. Who knows how that'll come out? Retail inventories, wholesale inventories. Case-Shiller Index about home prices. I just saw something that said, homes at an all-time high, interest rates also not coming in. And then, of course, we've got the ADP report on Wednesday, jobless claims on Thursday, and the very big employment report on Friday. ISM, PCE, core PCE, FOMC rate decision. Boom, we've got ourselves a week. So the number one thing for us to think about is risk, and realizing that risk assessment's what's going to keep us in the game for the long haul. So many of you know me, or else you probably wouldn't be here watching tonight. But for those of you who don't know me very well, I've been trading for about a little bit over 20 years. I wish I could have had the floor experience that our amazing guys like Hogue and Coach Jack and all of the coaches, Eddie, and all of those folks that know what the floor environment was like. I have no idea what it's like. I've been a technical and computer trading person for my entire career. And the one thing that I did not know how to manage was risk. And I know most of us here should follow KJ on X, but if you don't, he put out an amazing post over the weekend on consistency. And he talked about that being a really solid anchor to moving ourselves forward. And many of us are going to have the good fortune of being in the VIP program. And those of us that don't, we've still got to come in and do the deal. But the goal is going to be consistency. And if there's one thing that you can manage consistently is your risk threshold. And so we'll be talking a little bit about that tonight, but this week is going to be pretty crazy, not gonna lie. So as always, what I like to do is measure out what the volume chains, what the option chains are telling us about the week, and then just take a look at price. Remember, as traders that trade intraday, we often get caught in the noisy patches of the market, and so we have to recognize what noise looks like. And it looks like a series of highs and a series of lows captured in a specific space. Fancy term we might say is inventory accumulation. It's where everybody says, hey, listen, I'll buy up down here and I'll sell up here, but I'm not going out above that and I'm not going down below that. And then about 5 days ago, 6 days ago, we broke out of that inventory accumulation. And when we break out of an inventory accumulation space, this sideways messy bit that you could see on a 3-minute, a 5-minute, a 15-minute, these patterns are fractal. And that word means copies of itself within itself. If you want to see some really beautiful things and you are okay with nerding out for a quick second, you should check out Mandelbrot.
The market is open.
Fractals. Whoa, and here we are gapping up. I'm not surprised. China kicking the can down the street and the EU deal getting done. So we're going to break into the top of the range. Notice Monday's implied volatility is right up here at 64.56. And we are running into that number fairly quickly. It could be that we break over it, but at the first pass, you're going to see traders trying to sell underneath this formation. So the folks who came in on Friday and said, you know what, I'm going to sell the bottom of this range and I'm going to sell the top of the range with an option. They want to keep price inside of that squishy bit. And so you can see that actually happening. Let's move this to a 1-hour chart and let's talk about, you know what, let's go to a 15-minute. 15-minute is, it's better television if we can trade off of these 15-minute edges. So what are we staring down here? I am going to put these images up after the show's done. I'm going to put them up in the Coach Anne-Marie room in the Topstep Discord so you can see what the levels that have been measured out by the option chains are saying that the traders have for the week. Now, I will mention that last week we broke through Friday's top and we kept running. So a lot of the traders that sold the top with an option had to turn around and buy the market, so their delta would be 0, right? You sell a call, that's negative, so you have to buy something else that's positive, so when you add them together, it's 0. It's called delta hedging, okay? Little tip right there. Don't want to get too wonky, but again, as traders, the one thing we really need to stare down is what are we thinking about in terms of positioning ourselves in the market? So we could legitimately say, hey, you know what? Maybe I'll take a short right here, right? So let's say, hey,
order filled.
I'll take a short there. So notice, I think I'll move my stop just a little bit higher. So what do I expect? I expect this big move to the top, very close to the top of the option. I expect it to come in and fill the gap, right? A lot of other negative news out there, but we'll see what happens, right? I don't normally trade like this, to be honest. But I'm trading it here so we can take a look at things and go, all right, here's how we might manage a risk event if we are so inclined, right? Because I'm either going to be right or I'm going to be wrong. And I'm in competition with the rest of the entire market, and the only thing that's going to give me edge is understanding my risk. That's the way I'm going to compete against other traders. I'm going to hide this VWAP because it's getting on my nerves. Remove this, but this is the opening VWAP. I'm just going to hide it for now, right? Traders trying to dance around the area. We can see that there was a big buying formation right here, and I'm going to put that as an anchor at this high volume buy event, right? And that brings it all the way down to here. So, let's just see what happens, right? Either the trade goes well or it doesn't. All right, so one of the most important things to consider is how much size you're putting on, how to know if the trade is not going in your favor, and what kinds of signals the market can give you in terms of engaging. If we're newer as traders, fear becomes a big part of our mechanical flow, and it shouldn't be, right? Fear doesn't do anything. Well, fear can really sort of seize up our senses, but what fear might do good for us is heighten our awareness if we're keeping totally focused on what it is that we're doing. Okay, so that being said, we have a position that's going to say, hey, you know what? This is going to move up. This is going to move down. For me, I've got my risk sitting up here at the implied vol that they have marked for the day. Here are the Topstep daily levels. JD was so great for sending me the preview super early in the day. Thank you so much, JD. And so what we want to stare down always is just getting to a space where we understand what our risk is. We're comfortable with that risk. I mean, we don't want to lose. So we're comfortable with the risk, but at the same time, we're also in control of our emotions. So I was talking to my husband, who is also an amazing leader. He's been a leader of some very, very large organization, and he's a leader of leaders. And so his goal as a leader, after leading thousands of people over the course of his career and several very high pressure spaces, because he's my business manager, which sometimes can be bad, I assure you. But he's always talking to me about managing internal dialogue. And so we were talking this weekend, and I said, how do you train up someone to build their self-confidence? And so how do you make them feel, hey, I can do this? And he said something very interesting. He said, the first thing I ask them is, what's your internal dialogue like? So you're like, lady, why are you talking about this right now? Aren't we supposed to be trading? Yes, I have a trade on. I'm waiting for it to work out so I can ring the cash register. But in the meantime, I'm chit-chatting with you. So the big thing maybe we could think about this week is, what's your internal dialogue telling you when you put on a trade, while you're in a trade, post a trade, going into a trade, and listen to that internal dialogue. If it's a defeatist or fearful dialogue, what you're working on is a space where you have no self-confidence. And no self-confidence, even if you have a ton of talent, and my husband and I see this because we watch a lot of pro basketball, because one of our kids plays, and we can see a lot of kids with immense talent on the floor, but you can just look right in their eyes and you know they are living in the land of self-doubt. And so we don't have anybody staring at us. I mean, well, you guys stare at us on Topstep TV, right? And you can see what's going on a lot of times, especially if you're keenly aware of micro expressions. But for you as yourself, it's not a bad idea to put a mirror right at your desk and say, okay, I'm going to look at my face while I'm trading. What am I seeing in my face? Now, you're going to be able to feel whether you're scared, whether you're nervous, whether you've managed risk well, whether you're, whatever you're going to do. But the goal is to be confident, not only in trading specifically, but in getting better and improving process. That's going to be supremely important for you, right? As a trader, you're going to want to focus on listening to that internal dialogue and managing it properly. See, I don't really like that they're buying the top of this. Let me open up Bookmap and see what's going on. Hang on, folks. Oh, the default Bookmap is so hideous with that heat map and all that crazy stuff going on. All right, well, it looks about half and half, but it does look like they want to bounce this one. So we shall see what happens here. Okay, so if you're trying to build strategy, process, consistency, and eventually success, if you don't work on your inner dialogue and managing that headspace properly, you're going to be building on a foundation made of rotten wood. I would like maybe sand. That's easier, right? It's going to give out. It doesn't matter how great your strategy is, how amazing your process is. If you don't have self-confidence, at some point, you're going to go off the rails, because your self-confidence is going to force you to make decisions that are not going to be advantageous to you in the long run. Okay? So, work on that. Sit down, take a look at that, see how it goes. In the meantime, we'll leave this trade on. See what goes on. I'll be staring down Bookmap and checking things out in the near term. All right, let's go to the NQ. The NQ also broke above its ranges for last week, so it blew outside of its expectations. And look at where it's sitting right now. Monday's implied volatility move. And wouldn't you know it, look at all the arguing. Traders are arguing right here in this space, and I'm trying to get these pictures big so you guys don't have to put a magnifying glass on what you're staring at. You'll notice that my charts are very clean, not a lot of action going on. I like for things to be fairly quiet. I do, but notice how important these numbers are that I've mapped out from the option chains, right? I measure them, and I put them up here for us. And again, they'll be in the Coach Anne-Marie channel in Discord. Okay, so you can see we're well up over the ranges. We're gapping up. You can take a look at the volume profile. You know that the fat part of the curve is way down here. And so the traders are either going to try and hold this and break out, or they're going to fill the gap. Now, a lot of guys spend, the only trade they do is the gap fill, and then they're off to the beach. So having this one toolkit is pretty incredible. And so, if you want to do it, I don't love this idea at all, but I could do a stop sell here. Let me see how wide my risk would be. I don't like the risk event there at all. If these were tighter, I would do a stop sell at the bottom of these. But right now we're converging and holding tight. Everybody's arguing around that area, right into the zone. So let's see how gold's almost filled the gap already. All right. All right. Thank you so much, Andrew. You are the best. Just so happy to have you here. So let's take a look at the big picture frame for the NQ. Big week ahead. Let's take a look at the 4-hour formations. And what we can see, very choppy inventory accumulation right here, breaking out into the top of the ledge, right? Some people are going to want to go long. Some people are going to want to go short. They're just duking it out here. So this hourly candlestick that closes here should give us a pretty nice range. Dips, clearly buy zones, right? Our highest volume candlestick over the last 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days is still back here. This was the Jerome Powell needs to leave the Fed event, and then, oh, it's just a rumor, and we're off to the races. So dips are going to be buy zones. No doubt about it. The question is, where's the dip and what's our risk? And so the number one thing we have to think about is what kind of framework are we going to trade, and what does that risk look like? Momentum is pretty high, right? Momentum's pretty high. So if we're staring this down, we know our dips are buys. So let me show you a little technique. If you want to trade a 5-minute formation, we know Dolby talks about, these ranges and the patterns from the ranges. So my thought is that here we have a high and a low. So if you take a long right here, risk is very tight because underneath these levels, nobody is buying. So you can immediately go, if I take a buy right here, I have very small risk. If I take a sell, however, my risk is all the way at the top of this 5-minute candlestick and then some. So these are how you manage the ranges. I hear folks say this all the time. I'm just going to use a 20-tick stop or 30-tick stop. Listen, if you don't look at what the market is telling you the relative risk is, you're going to get chopped to ribbons and death by 1,000 cuts. Truly. Absolutely. If you're the type of trader that says, hey, I don't want to worry about things so much. I don't want to trade 52 times in a day. You think to yourself, hey, what is this big box telling you? This 2-day range here. It's telling you, listen, people came into this zone and they bought. And then they broke out of the area. So they should come back to the area, retest the old resistance, and it becomes support. So what do you want to do? You could use this really nice line. Let's see what these, I never remember what these things are. Settlement, ooh, that's always a good one, right? Come back into settlement. So for me, I'm going to go, hey, if it comes into settlement, I'll buy it, right? Got my risk, know what things are going to be like. I don't really care. If it comes in, it stops me out, too bad. If it comes in and it fills me and it breaks out, too bad. You have to be a little bit dispassionate and not get committed or attached to an outcome. It's very, very bad for you. You won't be able to have a clear mind about much of anything if you're always attached to an outcome, right? Okay, so that's what we're staring down. We've got these wide sideways spaces breaking up. If it pulls back, beauty. It's going to make a fantastic long, and my target will be somewhere up here where the resistance lies. Let's take a look at the YM. So here's the YM. The YM uses monthly options. They don't have daily. But here's something super important. Actually, let's look at a daily here for the YM. Why is this one something worth looking at? Marie, I don't trade the YM. It's so boring, blah, 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 blah. Okay, I feel you. I understand. But the reason we want to look at the YM is because it represents where foreign divestment spends the most time first entering the market and first leaving the market. So what have we had? We had a high that came, what day is that? December the 8th, somewhere around there. And then we had another lower high. I can't see what that date is. My face is blocking it. Somewhere before now. And now we've got another lower high, right? And so this maybe could be a topping formation, right? Maybe a topping formation, but it could also be a breakout. Look at the anchored VWAP. It's bullish. So pullbacks are going to be buy zones. So the question is, if I want to get the best position in this chart, what are the traders telling me that they've been doing? Well, until this afternoon's tick at the new open, what they're telling me is, hey, I'll buy it all the way up here, but if it's over that, I'm not going to buy it. And the buyers either sit back and wait, or the sellers come in and they push it to a floor of support. So I'm going to look to the left and see if there are other supports in that zone that feel comfortable. The more times they pop in there, the better. And so my thought is, if at all it comes back into that zone, that's pretty far away, that's going to be a really nice area to buy. It's very tight inside of the vol, right? These are the volatility ranges for the market, the high and the low. And the folks who've sold these options on the outside have been making an absolute killing. Just month after month, just printing, because the price action has been staying inside of these ranges, and they continue to stay inside of the range. If we are taking a look at the 5-minute formation, let's open it up. You can see the traders are arguing pretty well, right? I mean, do you want to get involved here? So you could go, yeah, I want to get involved here. It looks awesome. I want a long. Okay, what's your risk? It's going to be the bottom of the box, right? I want to go short. What's your risk? It's going to be the top of this area right here. Now, when ranges are tight like this and you're staring down 5 minutes, charts can move above and below. Me, I'm going to wait. I'm just going to wait and see what happens. I expect to fade, but the market can do anything. You know what I mean? Absolutely anything. There is, let's put an anchored VWAP over here on this 5-minute. It's all the way down here, right? Old resistance, new support. Traders are just sort of feeling things out. I bet you by the time Dakota gets here tonight, we're going to have some action. But so far, stuck in the mud, not moving all over the place, and we'll just see what happens. I am going to talk to Andre about building a study on the Globex ORB and see what he says. And not our Andre from Edgeville. I think that would be very interesting commentary. I'm going to talk to him about that. Yeah. Okay, let's take a look at micro Bitcoin. A lot of you know I love to trade this thing. And let's see what's going on. If you were staring this down, right, what would you say it was doing? Participate. Help me. Come on, people. Is it breaking out, though? Is it? Is it a downtrend, though? That's right. It is coiling It is ranging. It is not breaking out, ladies and gentlemen. Absolutely not. Why? Why isn't it breaking out? Okay, I'll tell you. It's breaking out. It's not breaking out because we've got a high, a lower high, a lower high, and a lower high. And then we have a low and a lower low and a retest of that low and a lower low. So it could be a flag pattern, right? Could be some kind of mean reversion. See, this is what a breakout looks like. A breakout is a clear move in a direction. This is simply a gap up. Now, could it move up to the moon? Of course. It's Bitcoin. It can do anything. But here's the bigger question. What have the traders done in times past coming into these levels? Why are there no candlesticks up here? Because nobody bought. Right? The only way you can have that candlestick print up here is somebody bought it and then, somebody sold it. So here somebody's buying it and here somebody's selling it, right? White candles up, blue candles down. And so when we stare this down and we go, oh, it's breaking out, is it? It's not. It's falling into a range. But here's the mistake that traders make. We go to our 5 minute or our 1 minute or our 3 minute and we go, oh, it's breaking out, without any regard for where the bigger positioning is sitting in the market. And that's extremely important. You've got to go wide angle before you go tight angle so you know where people are waiting for you with a hatchet behind the door, right? Your favorite scary movie event, right? And they're going to be waiting there for you. So it's not a matter of, oh, I'm going to trade this. I'm nervous and scared. The question's got to be, what is your thought process about going long? Well, candle's going up. Not good enough. Not good enough. Because we have to know where they're going, what the likelihood is that they break to the north, and what the likelihood is that they come back down. And here's the interesting thing. The last 1, 2, 3, 4 occasions that the market has come into this level, they've all turned around and come back in. So my kids are way into Bitcoin. I totally wish they weren't, but they're way into Bitcoin. And so I get all these articles from them. And the last week, 2 very big players have cashed out billions in their Bitcoin holdings. And of course, the diamond hands guys are going, oh, why'd they do that? And, everybody else is, wishing that they could have. I mean, I would like to have $13 billion worth of Bitcoin. I cashed in. I'm not going to enjoy the tax burden from that, but, it'll be great. So what we have to think about is what are we seeing with this backdrop of news? And so what I am seeing is sideways pressure. Does not mean that it won't break to the north. But what it is telling you is that you've got to be really careful if you're chasing it up here, because we've had sellers right around these zones for 1, 2, 3, 4 times, the last 4 times that it's been there. And so we have to be careful for that. I do have all the volatility areas here. It's already gone up through Monday's vol. It's into Tuesday's vol already, which also gives me a little bit of caution. We've got a VWAP. Let's move this anchored VWAP, shall we? Let's move it over here. Okay, so this VWAP looking a little downward. This VWAP, where we have a lot of pressure, is moving upward. This chart is sideways. So you want to look for the deep dips to be buy zones. I have been looking for 115,000, 119,000 for weeks, literally, since it broke out here. I got it on Friday, Thursday night, maybe in the overnight, came in, got me. So I am sitting long here, but now I only have a partial for this. This is clearly a place I'm going to close into this inventory pocket. All right, let's take a look at oil. So OPEC put out this thing just over the weekend, or maybe it was during the week. They said something like, hey, we realize that we're not trying to do X, Y, or Z. We're not trying to compress supply so that prices move up or whatever, right? The big thing, a lot of people go, oh, I can't trade oil. It's so, news-based. I got to tell you, just look at the pictures. You don't even have to worry about anything that is happening from this formation. You just look at the pictures, because have a gander at this chart. This chart is so congested, right? This is a year of motion. These are the days. The vol, interestingly, for 1 week takes us from the bottom of the range to the top of the range. So if we were thinking this through and we were saying to ourselves, I wonder what might be going on. Here, we've got a volume point of control, right? Sitting right here. That's our pink line, or whatever color that is. Can't really tell. And so this line here in the sand says, hey, everybody's arguing back and forth. Now, what's the rest of it saying? High, lower high, lower high. Low, higher low, higher low. So this is forming some kind of wedge. Very dangerous place to trade if you don't have risk defined. So my thought is, cool your jets, let it come all the way down into this heavy congestion zone, and consider the move from there. That's Wednesday's implied vol, by the way. It looks very, very noisy to me. Very noisy. And it's got some downside pressure on it. Our administration does want oil to come back in, but we are also refilling the SPR right now, the Strategic Petroleum Reserves. And so we're sort of nibbling in on that, trying to fill it back up. Right now, here we are sitting at, what's this blue number? I think it's settlement. I think blue is settlement. Yes. This cyan is settlement. It's bouncing right off settlement. If you said, hey, I want to go long here. I want to go long oil. Where would your stop have to be? Underneath this ledge. That's where everybody said, hey, I don't want to go any further than that, right? And so if you're thinking about that, everything looks pretty sideways. Last time it came here, it held on pretty well. So you literally could put an order out and say, you know what? I'm going to try and buy 65. It's okay, right? Give it a little bit of room, one contract, nothing crazy, and then you watch to see it move to the top of the range, right? Listen, when we take trades, they're either going to work or they're not. Don't wrap yourself around the axle. But what you do need to do is think about process and really repeating process over and over and over again. All right? That's so important. It's a thing that we don't do. And that's what I loved about KJ's post on X. He was like, how many of us know that we need to get to the gym, or we know that we need to eat better, or we know that we need to sleep more, or we know that we need to drink less, but we don't do it. And consistency is the hallmark of excellence. It is the hallmark of excellence. That's why you get to the major leagues. That's why you get to the NBA. That's why you get to the NFL. All of those things. It's excellence. They don't want a guy that does well for one game and then, falls out of bed for the next 5. Day after day after day after day. And guess how they do it? One step at a time, one foot in front of the other, process, 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 process. Many of us come to the trading game like it is, a game, right? A long time ago, I offended a Wall Street Journal reporter who's interviewing me, and she said, "You call trading a game, and this is serious business." And I said, "Yeah, that's true. I do call it a game. And you're right, it is serious business, but it's about competition." And to loop back to our original conversation, if you don't have your internal dialogue really tightened down, the person who will defeat you in the greatest measure is yourself. How do I know this? I personally, I've always believed in myself, right? Super nerd, always stuck out, just never normal, never ever normal. But I always believed in myself, but the way I made myself push harder was that I would say terrible things about myself, and I would think if I was really hard on myself, then somehow that would drive me to be better. Well, I got to tell you, I'm pretty sure I would be much further ahead if I had not used personal derision as the way to improve myself. And anybody who comes in and says to you, "Hey, you were crap." Okay, how's that help me get better? Do you know what I'm saying? And so if we keep doing that to ourselves, we know that doesn't help us get better. So we just have to work on those things that are conducive to improvement, right? And on a side note, if you deal with other people, I've led a lot of teams, and I've been a consultant for a lot of big teams. And if you're trying to get people from one place to the next, the way you interact with them is always relative to what it is you want to accomplish. Now, if you're interested in deriding other people, you got to look at yourself in the mirror. But if you want someone to improve, you have to do it in the spirit of encouragement. Hey, I saw this. Can we try this? And that's how you have to deal with yourself. All right. Sally, psychologist, is going to leave the room. She's leaving the room. I'm here. Right? Is a stick important sometimes? Yes. But some people only know how to use the stick. And some people only know how to use the carrot. But I have to tell you, I have found that being a servant leader has helped me become a better human and made me get more out of my teams over the years. And I have led many teams for decades, right? Very often dealing with psychological issues. Everybody's got something that they're nervous or uptight about, and if you think of others first, you're going to get to where you're going. It just is what it is. It's I don't know. It's the law of you reap what you sow, kind of. All right. So on with the rest. Someone said, "Hey, gold's almost filled its gap," but take a look at the movement that gold has had since this opening. I mean, kapow. Let's take a peek at this. Notice where it stopped. Right about, what is that? maybe 4 or 5 points off of Wednesday's implied vol. Now, it is last time Jay and I were on together, it's probably been a couple of weeks, and he should have been on tonight, but I'm an absolute knucklehead with technology, and I just, no matter how much they try to teach me, I'm sure they're in the background in production going, what are we going to do with this girl? We cannot get her to press the right buttons. But anyways, here we go. So what Jay and I were talking about was that gold was feeling very heavy, and it was going to come down, and folks were going to try and lift it up. So let's take a look at this big picture here, right? Let's look at a big picture and see what price action has been doing. And wouldn't you know it? Okay, if I told you to look at this, what would you say? What is this chart doing? Yeah, butkus. It's not doing anything, right? Higher lows, lower highs. Just a jagged, awful mess. What we do know is overall the trend is up. So what they're doing, look at this volume shelf they're building, right? If they lose this volume shelf, they're probably going to fall into the next volume shelf. I don't know that they will, but if they do, that's going to come crashing kind of hard, right? Now, the dollar's in a little bit of a pickle. I think everybody keeps buying gold. Central banks are not going to stop buying gold, but it looks like they're becoming a little bit more price sensitive. They seem to be price insensitive up here, but this, in my mind, ladies and gentlemen, this is a bounce. That's going to be another short. So, how am I going to trade that? Well, first thing I want to do is figure out what this opening range will do, right? And it's coming in, what time is it? Holy cow, time flies when I'm just yammering on about markets. I love the markets, I do. I just love it. I appreciate you guys putting up with me. I know I'm a little bit crazy. So here's what it's done. It's gapped down and they immediately bought the bottom. So what do these kinds of candlesticks tell us? They tell us that traders are waiting here on the bottom, just like this huge wick up here told us that traders were waiting at the top. Sell it off. Now they're trying to buy it and puts us in this congestion. So where am I looking for a short? I'd be looking for a short all the way up at the top here, right? If I were a little bit more adventurous, I'd probably be using the micros, to be honest, overnight, because $10 a tick when gold can move $50 at a clip, yeah, I don't want to do that. And so if I were more adventurous or staying up past my bedtime, I would look at maybe 33.48, 33.49 and see if they come in and start selling off this range. They have not filled the gap. Close, but no cigar. So that's going to tell you something also, right? If you're up here and all the participants here are like, ooh, we better buy this dip. It's a huge opportunity to be buying, but I can't fill the gap. That's not bullish. That's not bullish at all. So they're going to come back and they're going to try to build some inventory down here and try it again. If you want to do that, I'm going to be watching this for a couple of hours. So I think I'm going to put this one here, right about this area at Monday's implied vol. And I'm going to put a stop sell here in case I'm drifted away and not seen it. So that's what I'm going to look at. I'm going to trade it up into this area, but I do not like the fact, particularly if I were a buyer, I do not like the fact that they could not fill this gap, right? Because from the big spike down there, traders ought to be moving up into the next space. All right, I'm going to take some questions. So let's see if everybody's here just chit-chatting about random things. Thank you very much. So can you explain where you get the implied vol data? So I trade on a couple of different platforms live, right? A couple is an underestimation, but I have a lot of different accounts. And so in a full brokerage service, you're going to have option chains that are going to be sitting inside of your platform. And they're going to tell you what the options look like. And so they'll tell you, hey, we've got this kind of volatility, and it measures out to 16 points. And so there's actually a way that you can calculate that from implied volatility, but who wants a calculation involving a square root of anything, right? Nobody. So, square root, no! So yeah, that's where you get it from. You have to go to the option chains, and then you have to choose implied volatility. If you look at that, you get to find it. What percentage of futures traders day trade versus hold overnight? So I have no idea what that answer is. The question might be, why do you want to know the answer to that? What might be the reason? Now, here's what we do know. Overnight volume is always lower than trading day volume. Since on Topstep, we can't hold trades from the close of one day into an open of another, we can go into the close, and soon as the next day opens, we take another long. So we definitely can do that. The question then is, can we trade better when volume is lighter? And so here's something super interesting. I think Dakota proves this out a lot. When the market is not erratic, with lots of volume pushing things from one direction to another, you usually get some pretty stable price action if you stare down where the ranges are sitting. And again, not to beat a dead horse, please do not be offended by that terminology. One, the horse is already dead, so it's not going to feel you beating it. But then secondly, it's just an old term, right? I'm an old lady. I use old chit-chat. So, not to belabor the point, it's very important to zoom out so you can see where relative risk is sitting. It's incredibly important. Framing out your relative risk, and then just be comfortable taking a trade and saying, you know what, my hypothesis is old resistance is going to be new support, or old support is going to be new support, or old resistance is going to be new resistance. That means I'm going to short the tops of my formations, right? But at the same time, look for the market to tell you what to do. It's super important. I mean, it's super important. Will your stop market sell order below your limit? Okay, so we don't really have bracket orders per se, but yes, Wyatt, that's a great question. the question was, will your stop market sell order below your limit buy automatically cancel the bracket? Yes, it will, because here's the reason. If I'm only buying one and then I have a stop market sell, absolutely, 1 for 1. And then all of a sudden, the platform has nothing else to trade, so you're going to be flat. That way, the limit order above and the limit order below, showing the stops, will disappear. That's a great way to do that. Oh, what a fantastic question. Why does it gap up or gap down? This is terrific. Okay, so let's say, and I'm going to use our resident TopstepTV personality, Andre. He gave me a great analogy. Let's say, and don't throw tomatoes for anybody that doesn't like her. Let's say there are 100 Taylor Swift tickets that are going to go on sale the second the 6 o'clock Eastern time market goes off. Okay? I definitely want a ticket. Let's just say, I definitely want a ticket. What am I going to do the moment the market opens? I'm going to put an order in for an amount that is less than the last time the tickets were priced. Same thing in the markets. If the market gaps up, we're not talking about rollover here. There's another reason the market can either gap up or gap down, because the traders are moving from one contract to another, because futures contracts have an expiration date. They don't go on forever. They always have an expiration date. So if I'm very excited about getting involved, I'm going to put an order in that as soon as the market opens up, I know it's going to get filled. That's because I put an order out above, so that somebody looking to sell is going to go, oh my gosh, I'm going to sell it to you at that price. Of course I am. That's the simple way, the simple reason the market gaps up. Gaps down the same way. If somebody is seeing something horrific, right, whatever they see, and they go, holy cow, I got to get out of this. Last amount was 6,450. I'm going 6,430. I don't care. I got to get out. I just have to get out. I'll take the cheapest price. And that's what makes the market gap up or down, because they're traders waiting right there, and they say to themselves, I got to put that order in and get it filled. So that happens. That was a great question. Hat tip to who asked that question? Well, you know me. I can't read these things very well. Was it Wyatt? Maybe it was Wyatt. I don't know. Trade Hawk. Yes. Fantastic question. Love that. Do you suggest regular trading hours, or do we need extended hours to trade? Carmen, that's a tough question for two reasons. One, I don't know what time of day your brain is most active or it's most sharp. I have found that the later I trade in the day, the more likely it is that I do something stupid. I can't help myself. I could help myself by not trading. So the thought process is, when is your mind most alert? How much mental power do you have to concentrate for an extended period of time? And are you aware enough of yourself to go, uh-oh, you're slipping? So before you go off the rails, why don't you just cut it off? See, a lot of us trade very emotionally. We get down a few hundred, a few thousand, we're like, oh, I got to make it back. Well, listen, we're not machines. We're humans, and we don't operate at peak every day, right? I mean, even some of the best pitchers are going to walk 3 guys in an inning. I mean, it happens, right? And they still get paid hundreds of millions of dollars. We aren't perfect. We're not machines. And so we're going to break down. So you have to be very self-aware to do that. If you decide on one of those spaces, then I would say, maybe 3-4 hour chunks at a time, max. Because you've got to be very present. You've got to be present in the moment and not distracted by so many of the things, all right? You've got to be present with the charts to understand what's going on. So that's what I would say. And if you like regular trading hours, volume's bigger, maybe you can read the charts better then, whatever works for you, right? This is the game we play. There are literally 10,000 ways to make money and lose money in the market. The only thing we have to be rock solid on is learning to establish risk and making sure that we are not building our foundation of strategy, process, and consistency on a bedrock of sand or rotten wood, right? We've got to make that concrete, and that's working on that inner dialogue and keeping yourself aware and not listen, if people say stuff and it hurts your feelings, we can't help that. That's their problem, okay? What we can do is go, I'm not going to let that affect me. I've got things to do. I'm moving forward. That's their bag. Here we go. And start making that stuff roll off your back. If it can't roll off your back, pull back. Do something like me. I take a lot of confidence in my Bible. That's just me. I'm one of those Jesus freaks. But whatever you do, you get back and just get yourself to center. Go touch grass. Read a book, just because you cannot afford to have negative self-chatter sitting in your brain if you want to achieve greatness. And if we want to start making money out of the markets, we are going to have to compete at a more significant level than average, because average people lose money in the market. And if we don't want to be average, we have to do things that aren't average. You know what I mean? So, is anyone showing accurate entries? I don't know. I think I'm fine. So much nuggets here. I hope you're all taking notes. Hey, guess what? We get to repeat. We can rewind. So that's always good. Hi, Emery. The values on VPVR are different from what's displayed on the screen. How do we determine point of control as the correct value? Man, D, that is a great question. So I did know Rob Smith. I did. I miss him. He was a good friend of mine. He was a really good friend of mine. Sorry, folks. Haven't seen his name in a while. But I do miss him very much. He was a sweetheart of a guy. Different, but very, very sweet. Okay, so D says, I have to tell you a secret. I see what these POCs are, point of control. I see the volume, weighted price, via whatever. I don't really care what they say. The reason being is at the end of the day, it all looks a little bit like a range to me. And my thought is always, okay, if I want to trade this, where can I get in on the cheap so that I have the least risk and the greatest reward versus where do I get out at maximum reward without having a bunch of my money come back on me from the opposite side. And so I don't really care where the point of control is. It might be a range, it might be the whole bit. I care where settlement is. That's super important to me because a lot of people look at where settlement is. But this business of point of control and, I'm like, yeah, I can see that they're crowding here. My eyeballs can tell me that this is sort of the region to look at. So it's not, I know, does that feel like I'm punting? I'm not really punting at all. What I'm saying is, don't fret about that so much. Take a look at, all right, I see there's some line being plotted there. It could be right, could be wrong, I don't know. But what am I seeing the traders doing here? What are they doing? So they can't fill the gap here, right? So my thought is because they spent a lot of time in heavy congestion, they're going to come back, sort of steal up against, sort of like, you ever play some game like Stratego or whatever, Risk, anything like that. Sometimes you have to step back, rebuild your armaments, and then try it again. I think that's what these guys are going to do. And so we have to just look at it and go, all right, what are these traders trying to do here? What literally are they trying to do? And they're trying to hold a floor, but they're having trouble. And so that tells me I better not try and buy this. I have to wait until they get to a space where they might hold pretty well. And so how do I do that? I go back to the last places that they held, right? Right around here, right around here. Now, could I get wicked out? Absolutely. But I'm willing to take the risk down at these solid areas of support in order to get the position. And you know what? If it runs without me, I love saying this, the market is a buffet. It's open every day. Open almost 24 hours a day. And the most fun things you ever want to eat are on the buffet. But you have to wait until the stuff you want is on the buffet. Don't just take what's there, right? You don't want something that looks like it's been sitting under a heat lamp for 5 hours, right? No, you're going to wait for something that's good, that suits your purpose. So I think, that's my thought anyway. Do I have trades that go by me all the time? Absolutely. I don't care. I don't care. I'm just waiting for the next one. You know what I mean? So, what's your setting on that volume profile indicator? Let's do it because I don't know. Okay. Row's layout says number. Row size says 60. Volume says up, down. And value area says 70. So that's what I do. Oh, values. Let's give me the values. Nice. Yeah, we could do that. That's there. I hope that helped. Man cave trades. I like that. Somebody says, or you go to the Win and eat anything, no matter how old. Yes, Rob Smith, the trader. Hi, Ann. In a 150 account, or any account, At what time do you recommend taking a payout? After you make 4.5K or build a bigger buffer? Well, the question might be, what kinds of drawdowns do you normally have? Right? Taking a payout in order to go, hey, I took a payout, that's super important. Right? You start with the $200 payout. The question is, are you leaving yourself enough operating capital so that if you run into a few bad days, that you're not all of a sudden stressed out and unable to let your strategy work because you don't have enough of a buffer? That's how you know, right? And that's an individual trading event. You're a great coach. Thank you so much. Carmen, music to my ears. I have to tell you, I've been shuffling money around for a long time. And sometimes you get into this existential thing. You lay in bed and you go, what am I really doing? Just moving money around. And listen, I live an incredibly charmed life. I do. I'm very blessed. I have an incredibly charmed life. But at some point, you sit down and you go, man, I want to make a difference. I want to make a difference, I just don't want to be sitting around with a pile of money going, look at my pile of money. I'm not materialistic at all, right? My kids laugh at me, how unmaterialistic I am. But it's not about, for me, it was always about the game. It's not about the stuff. And so being here and talking to you guys and gals, I love doing it. It inspires me. It encourages me. I love engaging. I love giving back. And I hope that, my struggles are something that you can take away and use, something that where I can go, you know what? I'm going to take that. I'm going to use that. I'm going to exploit it for my good end. And that would please me so tremendously, right? To know that that's what you're all about. All right, so do you know how to get VWAP deviations on TopstepX? That's exactly right, Kunal. I always have to remind myself there's no shortage of opportunities, no need to chase. You have got it on the nose. So let's take a look at VWAP. And let's see if this one builds deviations. I don't know that it does, right? This is a little bit of a bare bones space that we're working through right now. And you know what? We just work with what we've got. So, no, we don't have those. So, yeah, no way to build the deviations around it. But I have to tell you, listen, those deviations matter until they don't. And here's what I mean. Most of the time, we've got standard deviations between 1 and 2.5. And once it gets to 2.5, there's a reflexive event where things gravitate back to the mean. But I can tell you, I have seen days where we've had 5 standard deviations from the VWAP, 7 standard deviations from the VWAP, even 10 standard deviations from the VWAP. So you have to be really careful using those edges as resistance of any kind, okay? So that's just my little warning there. My goal, if I could wave a magic wand, what I would wish is that every person understood individual candlestick action and what it meant from one candlestick to the other. Yeah, I know you're probably thinking, holy cow, thank goodness we're not going through that. That's going to be boring as who knows what. But I promise you, if you go through every candlestick and you go, okay, traders interacted here and then they went to here. What was the storyboard? If you try to build a storyboard, candlestick to candlestick, you're going to get the deepest understanding of price action than you could ever possibly get in all your life. And I promise you that, right? I promise you that. Candlestick action, price action first, indicators second, and then you'll understand what's going on. Hi, Emery. It's great having you around. Thank you very much. Yes, it's great. It's going to be fantastic when Topstep becomes brokerage. I see everybody has VPVR on the charts, but nobody to explain how to trade it. So, Tess, I got to tell you, I just look at it so I can see where people are clustering. So here's the rule of thumb. The rule of thumb is when the volume profile is fat, like it is right here where the VPVR is, right? This area right here, what it's telling us is that we have a lot of traders that are transacting business around this zone. So in essence, it's a coin toss. So if you had no risk and you just said, I'm going short and I'm going to take it when I get 2 ticks, you literally could close your eyes, open up a trade, either long or short, take it after 2 ticks to the good for you, and then you'd be great. So my rule of thumb around this red line is don't take any trades close to this, unless it's something that's reflexive, that tells me I'm moving in the direction. I look for directional breaks in the market to take, right? I'll watch sideways action and I'll trade the sideways action. But when it breaks, I'm going to trade the break. And then it comes into sideways action and sideways action. I'll trade the sideways. And when it breaks, I'm going to chase the break. And right now it's in the middle of a chase. But we don't have to have this on here. We literally don't. You could literally look at this and go, hey, I don't really care if I see the POC, point of control, right? I just want to see where the traders are crowding. That gives you a little bit of a chance to know, all right, well, I know they're crowding around there. I either want to trade if it's on the way back up, or I want to trade if it's going to break down. All right. Oh, nice. I don't like trading around the POC at all. I think it's awful. When is she done? You know what, Mr. 6000? I'm going to use that as my swan song. It's already 11 past 7. Holy cow. Yes. I had such fun talking to everybody. Thank you so much. Thank you so much. I appreciate each of you. And you know what? I will see you all tomorrow. Okay? Trade well. Watch your risk. And I'll see you soon.